thanks to everyone who's come. We're joined here by Pawel Kuswowski, is that a good pronunciation?
Very good, Erica. Thank
Thank
you.
you. Who's the CEO of Coinfirm. So they're a very exciting company who've been very big and instrumental in crypto crime and in anti-money laundering. So Pawel's going to share some stories about crypto hacks, about crypto crimes, about crypto being used in cybercrime, and how crypto can be traced once it has been used in crime. So he's going to share a few good war stories with us. We're also joined by Ryan Hanley, who is the MD of the crypto firm Token Market, who will be helping us to ask all of the difficult questions. But otherwise, Pawel, thank you very much for joining us and giving up your time. I know what you've got to say is very interesting. I'm excited to hear, always excited to hear stories of crypto crime and what's been going on behind the scenes. So looking forward to sharing. So Pawel, thank you very much for joining, and over to you.
Hi, Erica. Hi, Ryan. And hi, everyone. It's great to be here in Cryptocurry. And, I'm looking forward to the questions. I'm looking forward to the conversations. I think in a few words about Coinfirm, we are a blockchain analytics company with AML compliance focus. Recently, this year, we also launched a very exciting service called Reclaim Crypto, where many of the, let's say, victims of the crypto scams or crypto hacks, we are helping them a lot with, tracing funds and recovering these funds. So, which is, like critical element to our infrastructure. We have clients all over the world, and so we also see interesting differences and interesting story from all over the world. And as we spoke before, Erica and Ryan, some of the stories I will have to actually pause myself because some of the clients could be actually on the on the wrong side sometimes.
Fair enough.
Cool.
It's a fascinating area you're in, Pawel. I think maybe one of the first things would be good is to kind of understand a little bit more about maybe some of the differences in terms of tracking fraudulent transactions, theft on the blockchain, and maybe comparing that to some of the more traditional fraud that we see in the traditional banking world. Maybe you could sort of take us through an instance of, say I was selling something, typically in the traditional world, or I was an estate agent, I was selling some property, what kind of checks I would have to go through to be able to receive cash, and how that might maybe differ in a crypto related transaction.
Good question. I think that's something which is one of the biggest breakthrough in terms of fighting crime and kind of creating very transparent system. And I can give you comparison more into traditional finance, because I spent several years in compliance in banking, asset management sector. Before Coinfirm, I was global head of AML function for Royal Bank of Scotland, and I was responsible for, a number of processes and systems in, fraud and financial crime prevention. One of the, biggest challenge in traditional finance is, what you know. So basically is the transactions which you have in your system on one side, and then, also, incoming, outgoing transactions. So you have one step from your internal transaction to lose a track of funds, right? Which in comparison with crypto, we can analyze, every transaction, every, transaction register on blockchain. We can trace this, we can see, we can, analyze the patterns. So in your analysis, when you are, dealing with, for example, compliance officer or risk manager in the cryptocurrency exchange, you can have much better analysis of these transactions, right? Much better understanding. And also, when you are in banking environment, and I think, there's a lot of changes happening here. When you are in banking environment, you can suspect that something was, connected with criminal activity. There's almost never evidence here, in comparison with crypto world. In many situations, and the number of is dramatically increasing, we can provide evidence of a crime. So if hack happened, there is very good evidence. We see, through transaction analysis where this funds ended. So that's something which is extremely efficient system. So in traditional finance, you actually have over $2 trillion laundered in traditional finance, and only less than 1% is actually stopped. So, stopping crime in traditional finance is almost impossible. When, for example, in a Twitter hack, that was fascinating to see how, almost every, crypto enthusiast was watching, what is happening with these funds, and we were, with our competitors tracing these funds in the live scenario. It's almost like you can compare this to traditional finance when you completely have no understanding of what's happening.
So in traditional finance, I mean, anecdotally, I've heard that after 4 separate transactions, so maybe through 4 different bank accounts, you lose a lot of oversight in terms of where that money's been originated from. What are kind of the biggest hurdles in regards to that really, really low success rate for being able to prosecute? So you say it's 1% of 2 trillion. So what are the major hurdles from actually, tracking those transactions down and proving they've come from, say,
yeah. So it's what's called, banking secrecy or, data privacy. This is what's kind of, built, but it's not true because, effectively every transaction is put on the, almost every transaction is put into the Swift, messaging system. So if we would get access to a Swift messaging system and put into our analytics, we would have exactly the same information as in crypto. So, I mean, it's kind of, obvious question, Ryan, what's the biggest hurdle? I mean, the political decision to actually pursue this transaction and pursue this, criminal activity.
So people are now becoming more aware that money through crime, if it's going through crypto, can often easier be tracked through crypto than it can with fiat. And yet you've still got all of the big, like we discussed earlier, all of the big recent hacks are still demanding payment and ransoms in crypto.
Yeah.
And where do you see that going? What trends do you see around that? Do you see more of a draw towards privacy coins? Do you see more law enforcement around there? What do you see as next for crime payments in crypto?
So I think it will become more and more difficult and more risky, so it means that, the criminals will be taking still the risk, will be still using crypto for transactions, but they will take almost like, okay, I can, let's say 50% of the funds, I can lose this amount, for example.
Sure.
So the cost of criminal activity will be higher, and there will be more fingerprints to actually connect this with criminal. So I see this, that, I mean, I'm not big believer in privacy coins. I think, what the community needs to do is to create certain privacy wallets. That's for sure, right? Which would be KYC'd, all, properly set up. And this is probably what we're going to see moving forward.
So to go to the scenario that we talked about a little bit earlier, if one wanted to commit a crime and launder different amounts in crypto, say $1,000, $100,000, and $100 million. Right. Where do you see that going for each of those different scenarios for how to launder that money?
Nobody would care about $1,000, $100,000, potentially, that, but it's also, it's not typically, I think, that, frankly, that's probably threshold when something becomes, actually money laundering as opposed to, simple F. And so that's something, what you would probably see here is quick in and out, right? So quick, transaction to exchange, cashing this out on some previously, set up exchange, cashing this out in fiat, or, moving from exchange to some site. And then where you can buy goods, for example. Sure. Then you have 100 million, and that's becoming complicated, right? This is what we see. And hundreds of thousands of transactions, actually almost schemes prepared to being used for the same process again and again, right? So kind of hotspots or, systems which are set up to kind of disconnect these transactions. mixers, anonymizer, all this stuff, so
Sure.
typically, sometimes we see, hundreds of thousands of transactions to kind of disconnect. And you have very similar processes in crypto, which you have in traditional finance. So you have the layering, integration, all these steps typically, and you ending up with some integrations at the end of the process where people are cashing out, basically.
Sure. So, I mean, we saw recently there was a case, it was a recent Ponzi scheme, the Plus token scam, where they raised so much money, I think it was $3 billion, that when it was an exit scam from the beginning, it seems, that when they were trying to cash out all of this money, it affected the crypto markets.
Yeah.
Do you see that because of the relatively limited size of the crypto market, so that's being a barrier as to how much, I guess, money can be laundered through them?
I think that's good indication on that, maturity of the market is still not there in terms of, that should raise a lot of questions why, certain, large amounts are being cashed out. That's something, but I think it's pretty normal at this point of time to see this impact to the, let's say, liquidity on the market. Right, that will be interesting to see Mt. Gox, being cashed out or something like this. That will be probably interesting.
So one of the things you mentioned, Pawel, is like the speed being one of these elements in terms of successfully cashing something out, and I can imagine that's because, of course, being able to track these coins is relatively simple, going into an exchange and what have you, and then potentially coming out. But I guess there's a number of parties involved in actually being able to stop this. So, one, the exchange themselves; two, potentially local law enforcement to be able to investigate. What are some of the liabilities on the actors who are allowing people to come out into fiat? Because, let's say I've done a very successful scam on Garmin, I've taken in all this Bitcoin, I get to an exchange, I do it quickly, I take my money out in various different wallets, and I'm off into the sunset. Where does the liability get held? Is it with the exchange? Is it with the transactional bank, which is allowing me to come out into fiat? Is it with an AML provider?
Not for sure, not AML provider, that's for sure. 100%. Yeah, exactly. And so there is a lot of pressure and a lot of responsibility on exchanges, right? That's the key. And from let's say systemic point of view, the risk is with exchanges. So they need to, they always can say that that's not us, that's our client, right? But if we, there's a couple of points here which are problematic. One, if we see that, one by one hack scams are going through this particular exchange, right? They seemingly, use either some provider of AML, which would be, I don't know, like cheaper provider, or they don't have any. They have, for example, internal process which they claim, it's sufficient, which is in many situations not. So this would be one situation. So someone is saying, okay, it just happened, but we don't see this actually by accident. It's almost like systemic. That's one. Second, when exchange is saying, oh, we don't do KYC, for example, or we can say that KYC is not properly conducted, then we cannot. That's not stopping us from making them responsible. Then you can have, if there is any visibility that funds were transferred from the exchange into the scam or hack scheme and coming back to the exchange, that's almost like participating in particular, criminal activity. So there is a lot of things which you can almost, the exchange can be treated as party to this money laundering scheme, right?
And this is probably going to be one of those questions that you deflect, but are there any particular instances of centralized exchanges being prosecuted, or there being ongoing cases where they're going to be liable for some major fines for facilitating this kind of process?
There's increasing number, and it's definitely going to be an increasing number of exchanges which will be prosecuted, and especially that, like us, we are going into the, space where we can do from claim which you submit in Reclaim Crypto into subpoena. We want to do 24 hours, so 24 hours from claim to subpoena, right? And it's going to be very difficult for the, exchanges to say, we didn't know, we couldn't stop the funds. It's typically would be, very still active client, or if they have client who just very quickly close the account after receiving large amounts, what's the explanation? So I think, it's going to be increasing number of exchanges. So far, we see a lot of exchanges, already in being sued.
So one of the things we wanted to touch on as well in this is the increasing regulation of cryptocurrency within Europe and also internationally as well. And one of the ones which is probably particularly relevant for this group, because there is a large core within London, is the AML5 directive.
Yeah.
Would you maybe be able to take us through this a little bit more in terms of the overview of that directive, but also how that affects not only crypto exchanges, but potentially other crypto actors in their liabilities?
Yeah, I mean, I don't want to bore anyone into death, speaking about regulations here. So let me put it in this way. I mean, it's very similar system and processes which you have to have when you are dealing with crypto as in traditional finance. And it was the point from the start. We believe this strongly that it's going to be, just different asset class as opposed to, completely different world and responsibility. When you transfer value, you always need to think of, responsibility connected with this. If you are exempting large amounts of value being transferred over internet, that's going to be responsibility attached, obviously. So AMLD5 is just putting, the same requirement, the same level of requirements on the exchanges as you would have for payment processors, for casinos, for banks, financial institutions. So you need to have, transaction monitoring, onboarding, KYC, policies, procedures, people responsible in the organization. So all this stuff, it's the same process, unless you are, for example, you are not holding clients' private keys, and this is, that's critical, distinction, because then responsibility still lays with someone who holds the keys, right? Which is the individual. So that in this situation, you are removed from this responsibility, right? So you don't have to have all this compliance burden. Which may not, but I think, it's also, something which to be probably impacted over time, because then you have requirements on the travel rule, sending specific information to recipient of the data. So potentially what can happen, and there is a risk and discussion in the industry that, the let's say non-custodial wallets will be removed from the ecosystem, because it would carry a lot of risk for the traditional, for the exchanges, for the crypto exchanges, or they need to be aligned with KYC AML requirements.
So you promised us some juicy stories, and we've got John from the attendees asking if you can go into lots of details about the whole money laundering thing. Are there any specific examples that you can give us and go into about how some of the scams have managed to get money from scam into their pockets out of crypto?
There's a lot of cases which we've done, which are, kind of traditional. So I think, there's like one of the case, our early case, this is also when we almost first were setting up the processes, was one of the, person went to big four companies, asking for help on, some information which would be impacting negatively them, and payment in Bitcoin, right? So we helped them. Actually, we put, this data into our early systems, and we were tracing, where the funds are being, how the funds being transferred. At that point of time, I think criminals were not so much aware that, this tracing can happen in live environment. So once it ended up in one of the exchanges, the police came and stopped people basically receiving these funds. I think, it was payment out of ATM at the end, So that's when, this connection was to the real world, to real people.
You touched on ATMs there, the crypto ATMs. I read there was a report recently saying that there's no legal use case for them, which is maybe a slightly extreme viewpoint, but what is your view on them and on their use cases, and where do you think the whole crypto ATMs will go?
No, I think crypto ATMs are completely fine. I mean, we have clients like Spot9, for example, in Germany, who is using our systems, and everything is all right, fully audited, fully approved, by Buffin company. And it's the system which we design. Actually, you can be more precise in crypto ATM AML than you can do in traditional AML. Actually, when I remember, comparison with, partially also, what we translated into our systems for ATMs in crypto is, when I was in RBS, in the systems, we could see almost the pattern which someone was inserting the credit card or payment card, debit card, right before transaction happened. And someone was trying basically whether the amount hit the account. Immediately once it's hit the account, they withdraw the money, right? From the ATM. So this, like I mean, initially we couldn't understand what's happening. Later on, we realized that it's much bigger scam happening, and much bigger actually laundering scheme. So we put this in the systems in RBS to actually monitor this kind of pattern that someone is right before the transaction, someone is inserting debit card and withdrawing the money, right? So that's something which we also replicated to our systems for ATMs, right? Then you can also see much easier connected parties in crypto ATMs, right? So for example, one of the discussion is how much you can withdraw in one go from crypto ATM. And because we're using all the proximity, all the clustering methods, we can see that the same different addresses belong to the same person or connected person, and in this way we can put the limits much more effective.
Okay. So you can customize limits depending on personal behavior and personal use cases.
And another aspect is this is something which we also work is gaming and gambling industry. There's like responsible gaming, responsible gambling, part of the society, and I think for Londoners would be very very real problem in a number of ways. And you can actually subscribe to the website and put your name and you can put your details, and you can actually use certain amount only for gambling on the weekly or monthly basis. I know Ryan probably know this problem and know this website quite well. But you can also do this very similar thing in crypto, right? So we work on one of the project when because of the analytics, you can understand that people it's not so easy to cheat the system in this way, right? That you can just register in different websites and use different, let's say, logins. In crypto, you can actually connect these parties as well quite well.
So one of the major issues that we sort of see in terms of tracking coins is obviously when things go into a centralized exchange or into mixes. How are you able to associate, once things have gone into that black hole, where those funds have then gone on to? So let's say I was a master criminal, maybe I am. If I was going to take some funds, I'd probably take it into a wallet that had never been KYC'd. I would then probably exchange it or put it into a centralized exchange where there was no KYC requirements. And then I'd probably look to trade on that exchange a little bit and then to try and come out in some way or form. Now, obviously the major issue is coming out into fiat if I want to have fiat in my pocket. But how are you able to, when you go into that black box, how are you able to kind of track what's happened in terms of the outputs and continue to follow the money after you've gone into those black boxes? I think that's
part two of that question. How much is that affected by the quantity of money that Ryan, the master criminal, wants to cash out in fiat?
Yeah. But I think that, this is coming back to the question of responsibility. That's perfect example when you cannot say that you exchange are not liable for, what just happened. You receive the funds, right? And I mean, frankly, it's impossible. That's where it ends. Tracing, it's ending with exchanges, right? I mean, there's some ways which we are working on at the moment to kind of, expand even into, let's say, the intertrading of this exchange, especially with large amounts, what you're asking, Erica, right? But in principle, if there's largely, good liquidity, sufficient, let's say, to put money in, that's it. That's where our tracing is ending. We cannot go through this, and this is why the exchanges needs to be liable. They need to understand what's happening with their clients, and they need to be able to, let's say, trace these funds. They need to have the best systems in order to prevent this. Otherwise, it's just end goal. And we also, part of our, let's say, system, and part of our analysis, and part of something which is very exciting for a number of our government clients is analyzing KYC from exchanges from this perspective. Like what type of risk they have. So you have the profile of AML KYC processes and policies. How they do KYC, onboarding of the client. Whether they actually can trace funds, what's the reputation of the market, and then also, what's their profile in the crypto space, right? So we could almost like see exchange as a whole and see how much of the funds is from criminal activity, which we see is ending up in this exchange, right? And it's definitely the profile is raising in this situation. So we have some our favorite, let's say, exchanges, which we know that there's a lot of things are ending up in this exchanges for, like liquidity. Many times it's innocent. Many times it's something which it's almost impossible to get rid of, because the crime happens. The funds are transferred, right? I mean, there's no way they can be aware of this hack, for example, or scam, before they receive funds, right? But it's very complex, and I think the closer we are getting in terms of getting information in let's say reclaimed crypto system, or from the clients, or from anyone who got hacked, scammed, or something like this, and moving to cryptocurrency exchanges, the shorter is the time, the more responsibility there will be with cryptocurrency exchanges.
So one other area I'd love to go into on this, of being the master criminal that I am, there's been this great movement in the last couple of months in terms of DeFi. So we've seen these like huge money market, decentralized type exchanges, the likes of Uniswap, who are now, hitting some significant volume figures. Now, a lot of these protocols, what they say they plan to do is to completely decentralize the governance of these platforms. Therefore, no centralized liability or person that can be prosecuted potentially for committing certain crimes. What are some of the considerations when looking at AML around these new evolving platforms? Because a lot of them at the moment, there's no KYC implications in terms of the wallets. You can go and play within that platform, and then the governance eventually may be completely decentralized across many actors across many countries. Is that feasible, that those markets are going to continue as they currently are, or do we see some kind of regulation?
I think, we are very excited, like in DeFi, for a number of reasons. One of the reasons is if we have set, protocol is decentralized, it's working in some way, you can understand almost connections, by analyzing the protocol, by analyzing the flow of funds. It's just a matter of kind of, machine learning, get AI applied, all this stuff. And so that's one part. Second part, if this is completely decentralized, for example, one of the solutions which we are launching soon is Oracle, which will be speaking with the decentralized finance, decentralized finance exchanges, or lending platform, or anything like this, where they can query through smart contract to our API, get the AML checks, and it's actually something which you can embed into the DeFi protocol. But for example, certain funds, if they receive certain funds about certain risk, so there's a risk connected with, let's say, criminal activity, for example, or sanction breach, right? Then they will not be processing these funds. So that's something which and then if you add the layer of KYC provider, plugged into this, so then you have perfect solution for decentralized finance, fully compliant. And I think, in this situation, you could argue that this market could be completely more transparent than, the traditional, the cryptocurrency exchanges which we have right now. Similar questions would be very similar question you would have to the, coins which are launched or blockchains which are launched on the market, right? These are decentralized protocol, right? Like, Tezos, EOS, all this stuff, so that's like where you, there's always this question where this protocols is fully decentralized, right? Is Bitcoin fully decentralized? Is Ethereum fully decentralized? Is EOS fully decentralized? So there's this question, and I think, frankly, if someone, there's probably we're gonna see some court cases, which will be more defining, what does it mean decentralized, right? And where is actually you can remove responsibility. It's something, if someone like, Vitalik could say, do this, and this will be the direction of Ethereum, and people are doing this, executing this, is this actually sufficiently decentralized? Does it, where is, his responsibility? So that's something to be seen still.
Yeah. Well, talking of decentralized, and you mentioned earlier exchanges, the crypto exchanges is such a broad spectrum. One can't really put them in a box. You've got exchanges, for example, Gemini, they kindly sponsor our Future of Money event series, which is very, very good of them. But they're obviously an American exchange, and they're doing whatever they can to be above board and comply with the law and be as transparent as is possible. And then you've got other exchanges who are less on the transparent side. We touched on some of those earlier, who are either trying to be decentralized or in some cases are just scams from the beginning. And obviously we've got a new trend now towards some of the newer exchanges trying to offer a more transparent and let's say sort of legally compliant crypto experience, where they've got customer service, for example, and even insurance for the crypto assets stored on them. But then you've got the whole other spectrum of crypto exchanges where we've seen so many over the last years that they just shut down, or they close, or they disappear, or that the founder does an exit scam and nobody knows anything more about them. And what can be done to prevent that, do you think, or to?
Yeah, I think,
and can you go into examples? Are you willing to name names?
Yeah, I think, I give you, one of the statistics which we like, I think we, every quarter we do analysis of the KYC, not what we call Know Your Exchange, so report which is analyzing the exchanges as we discussed. And I tell you, the typically we lose a number of, let's say, 20 to 30 exchanges from, let's say, first 100, first 300 exchanges which we analyze. And it's around 10% which we lose on a quarterly basis. And it's typically, these are the ones which are poor in terms of AML, KYC compliance, fraud prevention. So you can, if you put money into these exchanges and you give private, key to these exchanges, what do you expect, right? It's like, if you want to have proper service, go to proper exchanges, go to Gemini, go to Coinbase, go to this exchanges, as opposed to, if you don't care, if you just, want to trade some money and you lose kind of, visibility. Most of the people, like, first thing when I go to the cryptocurrency exchange or any crypto related project is I check terms and conditions. Right? I check, if this matching, privacy policies. I check data protection. If this is, everything makes sense. What I am buying, where these exchanges are established, right? Are they supervised? Who is supervising them? Who are people running them? So this will be kind of, this is where I put my money. Otherwise, it's just, you don't know what's going to happen.
I guess the problem is, as we've seen with so many of the big crypto scams and the big Ponzi schemes, you might, for example, look at some of the bigger scams and see clearly that it's a scam from the beginning, and yet they still managed to scam billions of dollars out of people around the world. And it's often the people that are maybe less educated or new to crypto who believe what they are told, and what can be done around that. And yes, it's easy to say what one should know and one should do research, but yet there's hundreds of thousands at least of people who have fallen prey to these.
Yeah, to our Reclaim Crypto, there's, excellent examples of people who are like completely well educated in crypto space for a number of years, sometimes, and they still, are biting into this scams, so it's pretty sophisticated process by itself, so that's something which it's very difficult to avoid. But what I like with crypto from the start is almost like it's your responsibility to make sure you are protected, you protect yourself, you use the right services. Obviously there's a risk involved, especially when you lose your private keys. But I think at the same time, what is happening with asset tracing, like Coinfirm's our asset tracing, it's that this scams, these hacks, if they are obvious scams, obvious hacks, let's say, there will be nowhere to go with these funds.
On this point, you provide this service where you're able to track, you're able to trace, you're able to provide evidence. Yeah. But in order to actually get a successful recovery of funds, you need to have a lot of help from local law enforcement, right? In terms of being able to enforce certain things or being able to prosecute and what have you. And I'm going to have to make this really anonymous because we worked on one of these a while back, and I'm not going to name any names or jurisdictions or anything like that. But during a process of one of the sales that we did, we found these mule accounts, effectively, which were...
What are mule accounts, right?
So this is where one actor is giving many different wallets a small amount of money to be able to participate in a sale. So to get around, say, a minimum. So we had one very, very popular one.
In traditional finance, it's called smurfing, right? That's something.
So I think we termed the mule accounts. So it was like a couple of wallets were providing capital to a number of other wallets who were all doing KYC, and they were all participating in this sale to gain a larger, allocation of a sale than was necessary. And we kind of saw this. We saw this with Coinfirm. And to the regulator, who will remain nameless, we presented these facts and said, look, this is what's happened, and we've frozen this, and we've done X, Y, and Z. And it took a bloody long time to get any kind of response. I'm just wondering, this was obviously a few years back now, but how has that process changed? Is it still a bit of a struggle to get these guys to understand what's actually happening with some of these fraudulent cases? Are we starting to see prosecutions, get a little bit more, let's say, sophisticated and quicker in these kind of cases?
So you will have jurisdictions which are, law enforcement is helpful, right? And you will have jurisdictions where, law firms, attorneys are really helpful, so it's almost like, favorite one is US, obviously, so you are protected as a US citizen in a number of ways. Same time, US operators are under, the biggest scrutiny when something goes wrong, right? So, you wouldn't go in this situation typically to law enforcement. You will go to law firm, which is then suing the exchange, right? So far, the problem, one of the biggest problem is that sometimes the complexity of how to evidence, all the tracing, let's say, and it takes time. Sometimes it took years to analyze, but, the more sophisticated the tools are becoming, it's kind of, becoming almost like fully automated. And you get to the point where you see that the funds are basically moving into the exchange from hack or scam, and you can immediately notify the exchange or even pre-notify. Sometimes what we can do is even, see that certain funds are coming to the certain scheme, and which will be using, like different, let's say, systems then, different, let's say, addresses, but it's going to end up in particular exchange. So we can almost prevent this from happening, right? Or act immediately, in the way that the funds are being frozen on the exchange, and we come to, agreement with the exchange to kind of recover this fund. So that's the world which I believe going to be, we going into, right? It's going to be like with, I think, I like this example from one of the lawyer we deal with is, it's like with tobacco cases, right? The kind of, first case, which will be like big case when exchange will lose this in this situation, that, we prove them that they actually, could stop the funds and could recover the funds, and it's gonna, kill one of the major exchange in this way. Then we're gonna see, this actually being done in the right way, and this is gonna be, the eye opener for, exchanges and for hackers, scammers, that it's actually pretty difficult to do this kind of things.
So I know you're not going to name any names, but how close are we from that landmark case in terms of an exchange eating a fine that's so big that they are no longer able to operate?
Very, very close. Yeah.
Okay.
Weeks.
So we should watch the news and get the popcorn out.
Yeah.
Okay.
It's gonna be interesting. That's definitely.
Can you give any hints about what sort of exchange we'll be looking at?
No.
Okay. Shit, you've got to ask. Hey, we've got a very interesting question for you from the attendees, Pawel, from Lee, who is asking, hypothetically, if you were advising Iran or North Korea, or could be other countries, how would you advise that they move value globally through crypto whilst evading sanctions controls?
No, that would be, transferring value. Definitely not something which would be, close to sanctioned countries, That's definitely not going to happen. And
hypothetically, though, if you were.
You need to be very careful. It's always the question, right? Use the banks, use the right exchanges, with full KYC, AML, don't give them your private keys. This would be, how you should handle this part, right? It's not, it's nothing like, anything which would be, even a bit giving tips on like illegal activity, that's criminal offense as well for us.
Right.
That's money laundering, advising on this, that will be money laundering.
Okay, no, thank you. We've got a few more questions through from attendees, if we can put those to you. There's a few questions about your work with reclaims. Are you working with law enforcement on that?
In some countries, yes, of course, but in a number of majority of the cases, we would engage with law firms. That's our main contact. Obviously, we have Kroll, Duff and Phelps. We have some local, let's say, intelligence companies, helping with that with us. We have one of the big four, company which we are launching services with. So there's a number of let's say, it's quite complex, ecosystem which you are building to recover funds. But once we are very close to have this fully done ecosystem globally to trace and to recover funds globally. So yeah, I think it's the Reclaim Crypto will be good days for Reclaim Crypto.
What is the role of Kroll in those investigations?
So they more into traditional, let's say, assets recovery. So this are, what I like to say. I hope they're not gonna be angry for this, but I like to say that these guys are kind of flying to some offshore jurisdictions, meeting the person who did the hack or scam, sitting down together with this person and discussing how they can recover and return the funds to someone. These are many of these guys would be former DEA, FBI, CIA. So
who work there?
Very convincing. Your muscle, basically, Pawel. The guys who can doorstep the guys to force them to send things back. Okay.
I don't know the methods, but they're quite good in this. I have to say.
Someone has asked, I don't know if you can or will answer that, or might choose not to, but with reclaims, how do you get paid? It's an anonymous attendee who's asked that question.
And that's a very good question. So you will be surprised that there is ecosystem of kind of funds sponsoring, claims where they see that they are, able to recover. So there's a number. If we always say, we can be paid by the victim, for example, right? In some cases we can be paid by at the end of the process from the, let's say, percentage of recovered funds, or we can be, on the way, so, and we can zip it, depending of how confident we are. And we can also get external parties paying for this process.
Okay.
It's pretty, as I said, it's pretty complex, a structure which we are building.
Oh, thank you. Another question is how you reach the prosecution. You've mentioned you would go primarily through law firms, but they're asking, how do you get past pseudonymity to the link fund to individuals?
It depends on which side. Is it individuals on the exchange side, on the receiving side? I mean, there's a number of ways which you can recover funds, so you don't have to get, as we discussed, previously, so you can actually get exchange responsible for, receiving these funds and not putting in place. And I think, over time, when we see this, landmark cases, it's going to be much easier to convince exchanges to actually cooperate, right?
Mm-hmm. Okay. Thank you. Back to the law enforcement. Do you have to get a civil court order, or do you work with the law enforcement for the subpoena? And that seems to be difficult in such an international world.
It is, but at the same time, it's very lucrative, so that's something which is, if you consider that there are almost 2 billion quarterly funds stolen, hacked, and you can potentially recover 30% of this, that's worthwhile.
Yeah.
Sure. There's definitely, I think, we're going to see huge impact to, overall crypto ecosystem. It's going to be much safer overall.
How long do you think that will take until we see a noticeable difference in safety and in reduction of hacks?
Hopefully by the end of this year.
We've talked a lot about KYC, AML, recovering of funds on behalf of, hacks and what have you. But you guys track the whole blockchain across all of, various different protocols.
Yeah.
Is there anything else you're doing around things like pump and dump schemes or wash trading, which certain exchanges are participating in? So we've seen a very interesting case in Canada recently with Coinfirm, who have just had their board effectively taken out by the Canadian financial regulator for a whistleblower talking about their wash trading in the process of being regulated by the Canadian regulator. Are there any things you're kind of working on around that kind of area? Some of the more darker areas of that?
Yeah, I think, overall, I think that the wash trade, the traditional finance, it was the same problem in traditional finance. This was covered in Europe by Market Abuse Directive, Market in Financial Instrument Directive. So that's for us, it's pretty obvious next steps in terms of, analytics. For us, it's like it's different analytics connecting, internal trades, let's say, with external. Like one of the interesting part is proof of reserve. That's something which is very critical as well, from seeing, whether the exchange where you are putting money in is actually liquid and, still, can operate. And in many cases, you will be very surprised, with how close some of the exchanges will be coming into, large amounts of funds being extracted. There's a lot of, if you ask about, like pump and dump, that's already, it's like, in traditional finance, that's well recognized, right? Mm-hmm. Piggybacking, all this stuff, that's well recognized, and it's the same logic, applying the same, almost algorithm on our side. So we have this big engine which we insert, different sources of data, and we structure, algorithms, mm-hmm. or apply machine learning to analyze this. So that's, and the data is unbelievable.
Sure. A few very interesting questions have come through. So first one, Yatu Yoga. So Yatu is a very interesting guy. He's doing a PhD in the anthropology of the crypto and blockchain ecosystems. I think he's the only person in the world doing that. But he gets to meet a lot of people and companies that carry it. And he said he sometimes works with people who've been scammed, but amounts around between $200 to $3,000, and typically over Telegram. So it'll be over the numerous scams that get posted there, and that they're always asking who to contact to recover their funds. Who should they contact? I mean, my gut instinct is saying Probably sorry, but bad luck. But is there hope for such people, and what should they do?
That's actually, this is perfect example, and I think, this is, I mean, this is perfect example, for reclaim crypto. That's exactly, if we see that, there's someone received funds, it's repeated pattern, it's ended up in some of the exchanges or, websites which we can track. That's perfect example for us to work with, and that's one of the standard, let's say, crypto reclaim crypto case, so that's exactly, we don't want to leave these people, especially that we can do tracing for these people, and at the end, if there's sufficient evidence and sufficient amount to be recovered, then and I think over time the amount will be lowered because the tools will be more sophisticated.
Right. So for you, is it just about in such scams, is it just a question of getting enough people who've been affected by the same scam?
Exactly.
In the world of cybersecurity and e-commerce fraud and credit card fraud, they found that honeypots were very effective to identify bad actors. Is anybody doing that in crypto?
I'm not sure. I mean, let me put it in a different way. What we see in our system right now, we see this kind of schemes being used, or hotspots, which we call, right? And it's almost like okay, we see that, all right, it's coming to this pattern, or it's coming to this address. Then so that's something which would be or websites which you think that they are e-commerce website, but they actually money laundering schemes, right? I mean, it's very similar. You have very similar stuff happening in payment sector, right? That you effectively you think that this is innocent e-commerce, for example, and it's someone who is a payment gate for gambling or casinos. So, but we see exactly the same thing in crypto, and it's just a matter of having them on the radar in this particular situation. So we do this either, so we speak about this. We do this either internally or externally. So get the data from internet and insert into our system, or we have our system detecting certain patterns, and then marking this effectively as similar for something which would be which we saw previously.
Couple quick questions. An interesting one about finance. For a large commercial or retail bank, the costs of re-engineering their existing KYC and AML processes and systems to deal in a fully compliant way with fiat going into exchanges would involve a huge IT program in the 8 to 9 figures, and that's on top of the perceived reputational risk of offering banking services to crypto and the perceived negative associations. When do you think that traditional banks offering services to the crypto world will be seen as normal or accepted?
I think very soon, and we have growing number of banking clients, traditional clients moving into crypto in a number of different ways. Either accepting clients in crypto, opening the custody solutions, participating in travel rule solution. That's huge. I think in the, let's say, last month, we have at least 3 or 4 large European institutions, approaching us, and where we start, having proper conversation with them. And I mean, in US, what OCC, said, that custody solution, applying custody, if the bank can do custody solution for crypto world, it means that they can actually open accounts for crypto. Right, that's the same, considering lockdown, considering that nobody wants to touch cash anymore, considering all the CBDC projects which are going on. I think that's we're gonna see incredible amount of banks moving into this space. I'm actually thinking that it's gonna be more difficult to service those clients than like being afraid of small number of these clients.
Cool. No, thank you. One more question from the attendees. Do you see the need for a manual video verification due to deep fake videos and fake documents?
I'm not big fan.
Some crypto companies have been doing that. Yeah,
I'm not big fan. I think the whole KYC space should be redefined. Like, frankly, like, let's say someone has even the best tools to onboard the client. What if this client is compromised, right? What if the account is compromised and being used for there's much more, data which you can extract from analytics, from transaction, history and patterns of transactions, which you can. I think, the KYC idea is terrible, and needs to be redefined, and, it just kills the process, just kills the whole, unbanked system, people, banks focusing on onboarding the clients rather, or, cryptocurrency exchanges, like KYC the clients rather than tracing, and looking for, patterns, which are incorrect, so you can open offshore entity where the directors and shareholders are not disclosed, and you can, use this. Ryan asked about, traditional, let's say, property sector, right? This is something which is terrible at the moment, and they do KYC, but then at the end, all right, let's close the eye, we get someone, we can apply KYC for, and we don't see the whole, complexity behind the offshore accounts and etc. So.
One guy in the Cayman Islands who's a director of 4,000 companies does the KYC, gets approved, right? Yeah, I think you're right, but there's a huge amount of progress in that area, especially on a personal level. We're starting to see, I think you lent it across it, actually identifying that the person who's performing KYC is the actual person. So like monitoring of your keyboard strokes and various other like fingerprinting mechanisms to understand if that really is the person who's coming in. I mean, I know it's slightly...
This gets to, would you like your data, this type of data, being transferred to exchanges in the jurisdiction which you have no idea where it is, actually, or where are the servers, or, what's happening? I think that's crazy. I think, it's quite... It should be, this, the KYC, unless redone properly, I don't agree with the whole KYC. I think it's quite opposite, like, where you are sitting, which floor almost, you can get this type of data, environment which you are seeking, like stroke, keystrokes, all this stuff, that's ridiculous, because this is something which is applied to you. It's collecting more, data of you.
And so you're more of a believer in the kind of the self-sovereign identity, so being able to limit the information which is going, so being able to maybe, authorize yourself in one place and then limit the information you have to transact when signing up for services?
What you need to have is, understand, the pattern of transaction, understand, being able to kind of, analyze, whether this is coming from the right source or not, what's the, and there's so much data which you can collect in this way that, okay, you can probably, for larger transactions or more connected transaction, you need some KYC at some point, but for, let's say, 60% of transaction, you can rely fully on pattern analysis in crypto space, right? You cannot do this. It's almost like, that's an error. It's almost like the only way you could do AML in traditional finance is through KYC, and they fail in this. And in crypto, you can analyze transaction. You can have really in-depth information on the client, on the transaction, and you don't have to have KYC almost, right? You can almost disconnect this information.
No,
but if you understand, who whether this is individual person or that's something fishy.
Interesting. Thank you so much. We've come to the end of our hour, and conscious of your time and everyone else's time, but that's been really interesting. Thank you for answering all of those questions. Thank you to everyone who attended and joined and asked all of those questions. Sorry, there's a few that we didn't get round to, but this is being recorded and will be sent out. So Pawel, thank you so very much for joining us. We've got one last important question, because this is a Crypto Curry live chat, albeit unfortunately because of the coronavirus, we're not able to be together in person over curry. What is your favorite type of curry?
Yeah, chicken tikka masala.
Chicken tikka masala. I think that's the second time we've had that answer.
Yeah, no, that's. I have, I was yesterday actually, in the Indian restaurant, and that was my choice, over like long list of dishes, So yeah.
Okay, that's fair. No, well, thank you very much for joining us.
It means they are right, So.
Okay. Well, Anna is saying if we can get contact details for you, and if that's okay, then I'll be sending out an email with this afterwards, following up, probably not today, but then we'll send your contact details out if that's okay.
Perfect. Thank you very
but no, thank you so much for joining, and I really hope that you can join us, hopefully in person in London when we do resume.
In half a year, when we're gonna get proper results, and we come back to this.
And proper curry.
Yeah, and proper curry. Exactly.
The most important. Well, we'll look forward to getting you that chicken tikka masala then.
Yeah, exactly.
Thank you so much for joining us, Pawel, and thank you to everyone who joined, and see you next week for the next Crypto Curry live chat. Take care. Thank you.
Bye.
Bye.